the fundamental uses for silver continue to expand. And because of that, we should see increased demand. And at one point, we'll see silver break out and diverge from gold completely.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Phil Streible, the Chief Market Strategist at Blue Line Futures. Phil, thank you so much for joining us today.
Yeah, thanks for having me.
With precious metals today, we're seeing quite a big rebound off the pullback that we've been seeing for so long. We're seeing gold and silver up over 2%. We're recording this on Friday. What is your take?
Well, I really like it. I mean, we've been waiting for some kind of breakout, some kind of confirmation for quite a while. Gold has, it seems like it rallies up to about 1740, 1750, and then the rising yields kick in and prices start to decline again. So you look at 1680, that's been a key level support. It bounced off it like clockwork back last week. And since then, we've had a really strong rally upwards. So it's nice to see the chart pattern show a breakout to the upside. And we're very optimistic from here.
And we've talked before on this show about you were expecting a divergence between gold and silver prices. And as we've touched on before, we just continue to see that, that gold has fallen during this consolidation period, but silver has pretty much stayed flat. It's fallen a bit, but pretty much flat. What is your perspective going forward, if we can get an update on that, how you see gold and silver moving with respect to each other?
Well, I do believe that they're going to continue to diverge from each other, and it'll be shown exclusively in the gold-silver ratio, which is broken down from about 110 back in last year when COVID had struck. And then since then, it's been a steady decline. Over the last recent weeks, we've seen gold gain just a bit faster on silver, so the ratio has climbed back up. However, we believe that it's short-lived. The fundamental uses for silver continue to expand, and because of that, we should see increased demand. And at one point, we'll see silver break out and diverge from gold completely.
One of the things that people are saying is increasing precious metal prices is that we're seeing a downtick in the bond yields. Do you think the bond yields have made a significant impact on the precious metal prices?
Oh, no question about it. And that corresponds historically. You'll see when bond yields reach their bottom, that generally marks a top in gold, and then vice versa. So bond yields in 10-year Treasury yields have charged up pretty high, breaking through 1.5%. It looks like they'll target about 2% at the end of the year. So these rallies in gold, it's really got to break out above, 1850 in order to be an alarming rally. However, we do believe that there's quite a bit of upside potential right now, at least $50 to $75 before we see the next wave higher on yields.
And one of the things that might also be pushing gold and silver higher is demand, especially for gold from China. We're just seeing, before COVID, we saw billions of dollars each month of imports into China of gold. And then during COVID, it was about 600 million. This is reported from Reuters. And now in April and May, again, we're seeing billions of dollars being imported of gold. So what is your take on the increased demand we're seeing from China?
What China sees is they see the amount of money and money printing that has occurred not only in the United States, but globally. They're seeing rising inflation, and they've seen diluted, asset classes continuing to decrease in value. So they're coming in and they're trying to expand their reserves by purchasing hard assets like gold. We'll continue to see them ramp up those imports. And I think that that's been one of the main drivers also behind gold, but it should continue out throughout the remainder of the year.
And another asset that you've been really looking at right now, one of the commodities that you track, is oil. What is your take on what's happening right now with oil?
Yeah, oil's been a really good buy below $60, and we believe that the demand for oil, as more people get vaccinated, as they get more mobile, is going to continue to rise. Saudi Arabia already indicated that they wouldn't ramp up production at any kind of alarming level. So it should be a steady, gradual rise for oil. We expect oil prices to peak right around June. We were looking at about $70 as an upside target.
Now, I'm hearing that essentially right now we're seeing a lot of assets rise at the same time, people calling it a crack up boom. Do you see that continuing, where we just kind of see kind of an inflation scenario where we just see kind of all assets rise simultaneously?
Yeah, the melt up should continue. And it should continue through this second quarter. This will be one of the best performing quarters as far as economic data, earnings, and everything else because of the year over year comps. You look at last year, this time, everything was in lockdown. Now we go fast forward 1 year, people are opening up. There's a lot of pent up anxiety and a lot of buying. They're calling it like revenge travel and things like that. So everyone's going to have much better data, not only from a company standpoint, but also to economic standpoint. And that's what'll drive these prices higher. The problem is in the third and the fourth quarter, when those comps don't come in as great. That's when we really feel that the market is susceptible to a correction.
And when you're talking about the market being susceptible to a correction, are you specifically looking at the stock market?
Yeah, U.S. equities as a whole. I mean, if you look at, like the NASDAQ, for instance, it has done a great job coming back, making new highs, but there was a period of weakness. And, you look at some of these stay-at-home stocks, they're not going to be able to continue the trajectory upwards that they once were because of the fact that people are returning back to work. So we should see some pressure on specifically NASDAQ stocks, tech stocks, and what that'll do is that'll have a ripple effect on the market. Now, our underlying thesis is bullish, but you're going to have to rotate into more of the small caps, more of the infrastructure, and also the solar and EV vehicles. We believe that all those stocks are going to continue to outperform.
And what about the cryptocurrency sector? We're seeing, Bitcoin hitting all-time highs. It's this week a bit off of all-time highs, but your perspective on, do you think we're going to see a correction soon or just continue to go higher?
Well, the demand has been just continuing to increase. I find it amazing that some of these smaller cryptocurrencies that aren't really backed by anything are all getting tremendous gains and a lot of buying action. So, cryptocurrencies, I think that's something definitely that's here to stay, and it's going to continue to do well.
And kind of with respect to investing in general, like what is your approach when it comes to this situation where we have a lot of assets increasing, right? We want to be able to invest in a way to catch the waves, but then also hold for the long term as well. So what is kind of your general approach to kind of a prudent way to look at the markets right now?
Well, generally what we do is we'll measure and map out different areas of support and resistance. As the market hits these resistance points, we'll take positions off. That's why we use a lot of the smaller contracts. It's not uncommon to put on a couple percent allocation, and as the market hits these resistance points, we'll take off 0.5%, 0.25% of a position as we go up, and then look for other opportunities.
And when it comes to investing in precious metals, if you wanted to remind our viewers, like your take on that, there are a lot of different ways of doing that. You can invest in the mining sector, you can invest in the physical metal. What is your take on how you approach the precious metals? So
the physical sector, I think everybody should have, right? And I believe that the physicals are more of a hobby that people get because they hardly ever sell it. They're just buying and holding, just like if you're collecting, watches or coins or anything else. So it's just more for pleasure, I think. I think there is a certain insurance aspect of it where you're going to hold some degree of precious metals, but we really enjoy the futures contracts because of the near 24-hour access, the different sizes of the contracts. It's a global market. It moves off of a lot of different factors, and we believe that, that's the best exposure. The miners, it's a bit of a wild card because it is a company and it is derived from the price of the metals. I've never really understood why people would continue to buy mining stocks because of the fact that, you have you have company specific risk, you have market related risks, and sometimes these miners track the U.S. equities and really diverge from the precious metals, and they don't act as well. Plus, with a miner, you don't know where they could be mining all over the globe. There could be different governmental, restrictions and things like that. So there's just a lot going on when you have a mining stock.
Before we let you go, just a quick take on kind of the price action you see moving forward for silver in particular, because we've had a lot of guests on saying if it gets above 30, it could be off to the races. I know you've said $30, $40, $50 isn't out of the question. Your take on where we are right now and where we are going for the rest of the year.
Man, I'd love to see a wind up in a punch through 30 like no other. I think that it really will grab a lot of attention, get a lot of momentum. People believe that that's the next big thing to jump on. So we could see a serious silver squeeze to the upside. However, prices have been kind of trapped back and forth, consolidating, gone through periods of strength and weakness. So, I do think that it's a great bet to have on silver. This is why we do a lot of call options, 6 months, year out with clients. That way, if the market does go up, they already have a position in place rather than try and chase it higher.
Definitely. And when trading and when investing, nothing is really guaranteed, right? So what is your take on the worst case scenario we could see for silver?
Yeah, I don't think that silver in the teens, it kind of seems like, that might not happen because of all the money printing and everything else. This 22 could be like an extreme bear case scenario, but the way the price action's been, the way the fundamentals are there, the increasing demand, the limited supply, I think that it's going to be a slow and gradual steady higher. Where we were 16, 18, now it seems like 24 to 26 is how that old level previously was, is how the level is now. And I think when you go multi-year after multi-year, you're going to see silver trade at higher levels. I wouldn't be surprised if a year from now we're consolidating $30 to $32 level, a couple years later, 40 to 42, where it's not a green shoot. It's a floor and a good level of consolidation at those levels.
All right. Well, Phil Streible, we really appreciate your time today and all the insights you've given us. If our viewers would like to learn more and hear more of these interviews, please hit the subscribe button and the bell icon so you'll be notified of all the interviews we're doing. And if people would like to find you, where can they go online?
Yeah, go to www.bluelinefutures.com. Take a look around. We've got a lot of great resources on there. We've got a great daily report we write. We give people a 2-week trial on it. It's called the Morning Express. It's also written by Bill Baruch. He's been a guest on your show, and I think that people really enjoy it, and it's great reading.
Fantastic. Phil Streible, once again, thank you so much for your time, and God bless.
Thank you.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.